really is like. We're shifting our focus now. Gold is a highly valued asset in India, holding deep cultural significance among people of the country, especially women. Gold is regarded as both precious and auspicious, symbolizing tradition while also serving as a reliable investment for Indian households. Due to these factors, gold remains high in demand across the country. The price of 1 gram of 24 carat gold has risen by around 200 rupees in comparison to yesterday. And the price of 22 carat gold has also risen by around 100 rupees since yesterday. These rates fluctuate daily based on international market trends and currency values also and demand. Now, let us look at and compare today's gold prices with yesterday's, last week's and last year's gold prices. So, when we look at gold prices at a longer duration, we will see that if we look at last year's trend, the gold prices have risen. But if we look and compare it to a shorter duration of time, we will see a slight fluctuation in the prices. Now, when we look at gold prices per gram today versus yesterday, today on 20th November 2025, 24 carat gold stands at 12,502 rupees, and yesterday it stood at 12,365 rupees. So, we can clearly see around a 200 rupees gap. 22 carat gold today stands at 11,461, while yesterday it was at 11,334. So, there is a slight increase of around 100 rupees. 18 carat gold today is at 9,380 rupees, while yesterday it was at 9,273 rupees. So, clearly a very slight increase. We do not have to put in a lot of effort into understanding why these up or down trends are happening. When we compare it to last week, it has gone down because we saw that the gold prices actually rallied last month and now it is stabilizing. So, when we compare it to last week, today's price is 12,502 rupees for 24 carat. Last week it was 12,877. When we look at 22 carat gold, today it is at 11,461. Last week it was at 11,805 rupees. 18 carat gold, today it stands at 9,380 rupees, and last week it was at 9,662 rupees. So, clearly we can see that dip in price. Now, when we compare it to last month, like I have mentioned that it hit a high and now it is stabilizing. So, when we compare it to last month, which is 20th October 2025, and compare it to today, last month 24 carat gold stood at 13,084 rupees. Well, today it is at 12,502 rupees. 22 carat gold last month stood at 11,995 and today it is at 11,461. 18 carat gold actually stood at 9,817 and today it stands at 9,380 rupees. So, clearly we can see that this is how the gold prices actually are trying to stabilize themselves, and it also depends on the various geopolitical factors and the global market trends. Joining us on the broadcast will be Dr. Sharat Kohli, a senior economist, but till then let us understand why the gold prices are actually fluctuating and oscillating, because it hit a high last month due to Dhanteras, due to Diwali, when a lot of demand is there, and now what is happening, it is trying to actually stabilize the prices. I believe Dr. Sharat Kohli is on the line with us. Dr. Kohli, a very good morning to you. Thank you for joining us on this broadcast. We are seeing a slight uptick in the gold prices today, and we are also expecting the gold prices in the international markets to rise as well, because there has been a slight rise and it might even cross the $4,100 mark. How are you looking at it, sir?
Good morning, Shivani. Good morning to the viewers of NewsX. In fact, yesterday the prices did cross $4,100 for a short while. Then again, some profit booking came. I think it's important, Shivani, to understand that there is a lot of speculative element in gold prices. if you divide the gold prices into two parts, there is one, of course, which is the actual demand and supply. And the second part is the speculative element, where contracts are traded. No hard form gold is exchanged between the buyer and seller. Only contracts are bought and sold on COMEX and on MCX in India. These contracts expire on one day a month, and on before that day, there's a lot of hectic activity which goes in terms of buying and selling, and finally on the day the contract expires. So you will see just before expiry, there's a lot of volatility. Now again, we are nearing the expiry date for the month of November in America. We are into 20th today. So later this month, the contract would expire. So you see this volatility. If you look at the broader picture and the fundamentals, Shivani, you will see that the Fed rate cut is the big trigger now, because there is a 50% chance that Fed might cut the rate, and another 50% chance that it may not, because there are mixed inflation-related numbers coming out because of the shutdown in the U.S. in the past. The numbers were not coming to the surface, so it is very hard to guess as to which way inflation is going, although when the grocery and the food item tariffs were cut by President Trump, it is now being speculated that inflation may have spiked a bit, which might prevent the Fed from cutting down the rate. If that happens, you will see gold hovering around the same price, or there may be some more correction. But more important, Shivani, because I thought the discussion we do every morning is more relevant to long-term investors. Speculators, I don't really have any sympathy, or I don't comment too much on speculators. But for long-term investors, the undertone is bullish. They must consult their investment advisors and financial advisors for buying and selling. What we are doing here is a news analysis. The long-term trend, because of the shortage of gold. It is said, Shivani, that only 50,000 to 100,000 tons of gold is remaining to be mined. And every year, 5,000 to 10,000 tons of gold gets mined, which means in about 10 to 15 years, you will find that there will be no more gold reserves, unless, of course, a new technology is found to discover. Well, there is a lot of gold under the sea, but that is very, very difficult to mine. So when a commodity is going to get short in terms of supply, obviously there's going to be demand, and safe haven investment of gold is any time desirable. The way things are going around the world. We hear the word nuclear more often. We hear the word world war more often than not. So I think this is leading the investors to buy more and preserve with them. Also, the fears of recession next year, Shivani, are getting more and more realistic, because the American economy with $38 trillion of loans is in a very fragile economic position. So that is also making the people and central banks collect more gold. Well, I would like to give a very robust statement here, Shivani, with your permission, that until and unless central banks around the world start selling gold, you will not see a deep correction. These minor corrections of, from $4,100 to $4,000, you will not see a major correction.
Right. Thank you so much, Dr. Kohli, for joining us.